Welcome to another show of Smart Money Moves. I am your host and financial planner, Tiffany Tippens. And today we are going to get an early start off with life insurance. If many of you all don't know, September is Life Insurance Awareness Month, and I definitely this is a topic that is personal to me. Like I'm sure most of you all, you have had someone in your family had who has been affected, who has passed away, and not sure how everything went when that happened. But I'll just tell you a little personal story about myself. When I was 13 years old, I can remember it like yesterday. It was March 13th, 1989, and I was at volleyball practice. And I could remember my mom coming into the gym saying that I need to take you out of practice. Without me not knowing what was going on, I was just nervous. Have you ever felt like your heart is about to jump out of your chest? Well, that is exactly how I felt. And so as we got in the car, we were on my way to my grandmother's house, which is my father's mother. And she said something happened. She said somebody passed, but I don't know who. And so at that time, that was back in the day where grandmothers were older. And so my grandmother at that time had to be in her 60s. She was probably either early to mid 60s. And I was just thinking the whole time, oh my God, something happened to my dear. That's what we called her. And we lived out in the suburbs. My father and my grandmother lived out in the city, and I just couldn't function the whole time. I was quiet, but a million thoughts were running through my head. And when we arrived at the house, I could remember my uncle and a couple other people were standing outside. And so, we got there, was like, what happened? And I saw my grandmother and I knew something was wrong. That's when I was informed that my father, at the age of 39, had passed away. And it was devastating for me. My birthday is in April. He died March 13th, literally a month, 5 weeks, a month and a week from my 14th birthday. And at that time, my father was remarried, newly remarried. I don't think he had been married a full 2 years, uh, probably just a year and a half. Um, he had a new baby, and so my sister at that time was a year, and his wife was also pregnant at that time. And so, two separate families. Me and my brother were the oldest, and then he had a new family, and chaos erupted. At that time, my father did not leave a will. He did not leave any instruction on if he had passed away, who would handle his personal affairs. And I really don't know if my father even thought that far. My father was only 39. I'm 41 today, and I couldn't imagine just leaving this earth so soon. My father didn't necessarily have been sick. He had passed away in his sleep, and it was so unexpected and devastating. And so the topic of life insurance is really important to me because, as you can tell and you see, it touched me personally at a very young age. And so today, I want to talk about life insurance and the importance of having life insurance, and just using that story to encourage you that if you don't have life insurance, you definitely want to get it. I've talked about life insurance and the various types of life insurance before. Today, we're going to we're not going to do the entire seminar. I'm going to split it up, where next week I'm going to talk in more detail. But today, I really want to touch on just a few important points why it's so important to have life insurance. So let me go ahead, get into the seminar, and share my screen in a few minutes, and we will get started. Awesome. Okay, insurance matters. Hopefully, you all can see my screen now. Protecting those who matter to you most. So, just want to give a brief background about myself and my firm, and my commitment to people around the globe as far as it comes as financial education, not prospects, not my clients. This is not something I'm selling you, but it's just important information that everybody needs to know, because I would certainly not want this to happen to anyone, especially a young family that we had. Everybody was under the age of 20 when my father died. So a little bit of background about myself. I've been in the financial services industry pretty much since 1999, where I was working more so in with benefit plans, administrating benefit plans and retirement plans. I started off in HR, spent a few years in HR, got my insurance license in 2000, and got my first investment license in 2004. And thereafter, I've just continued to get one investment license after another. I am an IAR, which means an investment advisor representative, which means I basically have my 66 and I create financial plans for individuals and businesses. I also have my Series 7, which allows me to sell stock and mutual funds and bonds, as well as real estate investment trusts, pretty much anything that is available on the New York Stock Exchange and markets around these United States. My firm is located here in Dallas, Texas, but Texas is not the only state that I am licensed in. I'm licensed in Maryland, Virginia, DC, um, Florida, California, um, hmm, 13 states, let's just say, I'm licensed in. So I do business across the country with all different types of people. And of course, my commitment is to help people make smart decisions about their money. And so that's really anybody who's willing to listen and learn about the various financial topics that hit their personal finances on a day to day basis. So let's just talk about some facts about life insurance. One, 58 million US households say they need more life insurance. But the fact is, only 85% of consumers agreed that most people need life insurance. So there's a disparity there. 58 million versus 85%. We need it, but we don't have enough. And I always encourage people the cheapest life insurance to get and the best time to get it is when you are young, when you are healthy, and when you can be qualified to get a life insurance. So life insurance is based on your age and your health condition. So the older you get, generally, as we age, we end up having health conditions. But even if we don't have any health conditions, life insurance is rated on age as well. So you want to get life insurance at a very young age, as much as you can, preferably permanent insurance. And if you can't, I'm a firm believer of term insurance as well. I know there are agents out there that says, oh well, you only should get perm, or you only should get term insurance and invest the rest. I believe in both, and it really depends on your personal financial situation. But I definitely believe you should get some permanent insurance and have both, and we'll discuss that later in the presentation. The obligation or opportunity. What does life insurance do for you? Well, it replaces your income. It also helps pay estate taxes if you have a large estate. You can protect your home, pay for routine tasks that you would have had to pay for if someone wasn't there that was the head of the household, or not even the head of the household, but that their income was needed for household expenses, funding for college costs, supplementing retirement income, and aiding in the estate distribution, and of course, finally protecting a family business. And I look at all of these things, and my father was very engaged with me and my brother throughout our lives. And so I look at, I went to college, not only undergrad but graduate, and if he left enough life insurance, it's not that he didn't leave any, but if he left more than enough, that would have definitely helped pay for some expenses and my college education and my younger two sisters as well. Um, Paying for routine tasks. Of course, as an engaged father, we continue have, I mean, we were still growing. So we continue to have school expenses. We also continue to have just household expenses and living expenses. So, again, just not prepared. And I would have loved if I was knowledgeable enough at the age 13 that my father had talked to someone like myself to make sure that he had enough life insurance just in case he passed away. And unfortunately, he never had that opportunity. So I look at it as an obligation that you have to have life insurance to protect yourself, your family, and your estate. I'm going to take. play a quick video, we can get it going, and this gives a good indication of why we need life insurance. Awesome. I think that gave us a good understanding of why we need life insurance. So let's understand a little bit about life insurance. How does it work? How much do you need and what are your options? So, how does life insurance work? Well, it starts with an insurance company. So, just to name a few, you have your big insurance companies out there. Let's say New York Life, MetLife, Prudential. We all know and we've seen them on commercials. And so basically, you go to an insurance company to get a quote for life insurance. And as I stated before, the insurance company wants to know a lot about you and your health. So they will ask you, well, how old are you? How is your health condition? What type of activities do you perform? What's your occupation? Because these questions help them gauge risk of uh, how likely or soon would you need the policy, or do you need to collect on the policy. So let's just use someone, I'll even use a younger person. Let's say we have somebody who is at the age of 35, and this is someone who had a childhood illness. And let's say that person had heart problems. Now, not saying that this person is not insurable, but they're going to be more so at a higher risk because they have already had health problems. So, for compared to someone who does not have any health problems, that person may more than likely had a lower premium than with someone who had health issues. The insurance company is really gauging their risk on how much to charge for this particular person. So it doesn't just, it's not just based on age, it's also based on your health condition as well. And so let's say this person, even though as a child they had health conditions, now they're fine. The insurance company is going to assess their risk. So they may have to go through underwriting. And generally, I would be the first layer of underwriting that someone would go to. So you would speak to your agent. They're going to quote you on, do you have preferred health? Um, Non-preferred, which would be a standard rate, or are you a tobacco smoker or chewer or not? And so, generally, with my clients, based on how they tell me how their health is what I would probably set their rating at. As somebody's preferred, that means they're not on any medications, they haven't had any health conditions. But if I know somebody who probably has had some issues before, I might go ahead and set them at a standard rate. Here's what you want to really gauge when it comes to really talking to someone who has your best interest in mind. Please do know, and I say this with the most respect, if you have health conditions, know that you will not have a preferred rating. And I've seen clients come to me after they've been to a former agent and said, "Well, you know what? They set my rate at premium, but I told them I had some heart issues, or maybe before I had diabetes, but it wasn't controlled. Well, that's up to your agent. So you would not more than likely get a preferred rating. And I know a lot of agents have done that before just to get clients in the door. We want to the the agent who has your best interest in mind wants to set your expectations, and they need to set your expectations. So after underwriting is fully done, which means they order your medical records, maybe they may have to speak to your doctor or doctors. They want to make sure that we are giving them the best picture of health for you. And so you want to just make sure that you talk to your agent and say, you know what, are you setting me at a preferred, or are you setting me at standard? Know that if you smoke, 9 times out of 10, your rate or your premium is going to be higher. So I just want to make sure that I set good expectations for someone who has a good idea about uh, what type of premium, or how much of the premium that they're going to be paying. So I'm the first layer, but the actual medical underwriter is the second layer. And so that is going to be based on what you put on your application. Do know that there are doctors and nurses that are on staff for these insurance companies, that basically, after your doctor submits your medical reports, they're there to interpret those medical reports. So, based on the picture that we've painted, based on the information that your doctor has submitted, that you give approval to sign for, the final decision is going to be in underwriting, and that's when they can get your premium back to you. And then, in the event of your death, the insurance company will pay out your benefit to your family. So, your DNA test, detailed needs analysis. How do we calculate how much insurance you need? Well, we need to look at your short term cash needs, your long term cash needs, and your future obligations. So, where I would kind of start there is, do you have small children? And if your children are under the age of 18, I always say, in the event you died yesterday, clearly because you're living today, how much life insurance would you need to cover for your children? Well, that's going to be dependent on when you talk to the agent and how old your children are. Or if you don't have any children, but you have nieces, you have nephews, you have other places where you would love to be a benefactor to your estate, those are some things that you're going to think about as well. Do you have a spouse that you would leave behind? How would that affect their retirement planning, their standard of living? So these are the things that you want to do a detailed analysis of. Do you want to pay off the house or any other medical bills? These are some things that you want to think about and factoring how much of life insurance do you need. So we talked about the detailed analysis, coverage requirements. Here we look at what we need versus what we owe. Again, our kids going to college, they're young. Do we want to include their college costs? Do we want to include the house being paid off? And then that will give us our liquid asset. So we want to look at, again, how much coverage is required in order for us to take care of what's important for us after we leave this earth. So what are your options? Well, I talked about term insurance, term life insurance, and I also talked about permanent life insurance. Both apples, but we can see that they're very different. So, term life insurance is basically when you are renting your insurance policy, it's no different from renting an apartment. You rent an apartment for a certain year, that's your cost. You're not owning the house, so you don't build any equity in your house, which means you don't build any equity in the policy. If you outlive that 1 year, outlive that term, your premium definitely can go up and more than likely will go up because remember, I spoke that life insurance is determined on your age and your health condition. So the older you get, unfortunately, the closer we are moving to mortality. And so with term life insurance, you've probably heard you have a 5 year term, a 10-year term, a 20-year term, and the most that I've seen is 30 to 35 years. Generally, when you get in your 60s, and for a lot of companies, it's before the age of 65, the term decreases. So you probably can't get a 30-year term. More than likely, you'll be able to get a 20-year term. However, as I stated, the older you get, the more the policy is going to cost because you are closer to mortality. So if you're 60 years old and you bought a 20-year term and you live to 85, at age 81, you would no longer have any life insurance because the term has expired. They will give you the option to renew, but remember, you're 20 years older and the cost of your policy is going to be much more expensive. That's why I always recommend some permanent life insurance, even if it's just a burial policy of 10,000 because a lot of times people outlive that term insurance and they still need life insurance even at 80. And so you want to make sure that you have enough for your funeral. Now, here's something to think about. The younger you are and the younger your children are, you may want to go with a lot of term insurance. Maybe $1 million policy is definitely not going to cost as much as a permanent life insurance, but it wouldn't hurt as well to get 50,000 in permanent life insurance to supplement the cost so you can still capture your age and as you get older, keep that permanent life insurance because at 60, you're not going to need that much insurance. Your kids are older. Your estate may not be that much, so you may not need as much life insurance if they're older. College expenses are paid off. You already have your house paid off. So there's a way that you can alleviate some of that insurance and change your options. Keep in mind that insurance rates change really on an annual basis, so it's always good to follow up, check, and review your policy and see when the last time you had obtained insurance if rates went down. So I've talked about term life insurance, permanent life insurance. Whole life is one part of permanent life insurance. Whole life basically, um, again, you're getting a policy from the insurance company. So you have your certificate of insurance. They select what your premium is based on your age and your health condition. And then a portion of your premium goes towards cash value. The other goes towards the cost of protection, which is the life insurance. And so, just like buying a house, let's say your premium is $100. Let's say $50 is going towards the cost of your insurance, and the other $50 is going to cash value. Over the years, you can definitely build enough cash value and use that money for whatever you want to. You can use it for your child's wedding. You can use it to supplement retirement. You can use to start a business. And guess what? You have no age requirements on, unlike retirement plans, a 401k or 403b or 457 plans. You have no age requirements on when you can take that money out. And I use this as a strategy for a lot of my highly compensated clients. Hey, you want to put some money away? This is very similar to investing in a Roth IRA. You're putting the money in a Roth IRA. The money you put in was already taxed, just like your premium. However, with a Roth, when you take it out, you have to be age 59 and a half, and you have to have the money in the account for at least 5 years in order to take it out tax free. Or if not, the interest that grew in the Roth IRA over time is going to be taxed. Slightly different with the whole life and other permanent policies. The premium that you paid in was after tax. However, the interest grew pre-tax. And so when you take your money out of life insurance, when you take it out at the time of distribution, the interest is going to be taxed at that time. But guess what? The premium or your cost basis won't be taxed. So let's just kind of use an example. You got $100,000 policy, and let's say your premium was $200 a month, and a portion went towards the cost of protection, the other portion went towards the cash value. Let's say you had this policy over 25 years, and now you have uh, $57,000 in your policy. Remember, the death benefit is $100,000. And however, your cash value is $57,000, but you paid $40,000 worth of premiums over that 25 years. What is going to be taxed when you take your money out? Only 17,000. Your cash basis is the amount that you paid into the cash value. That's that after tax amount. Okay? Remember, it's the 40,000, the money you paid into. The interest that grew over those 25 years is the 17,000. That's what you're going to be taxed at that time. And so much less tax dollars that you're going to be paying, but you have money to take out. And guess what? If you retire before the age of 62, which is Social Security age, or before 59 and a half, you have no penalties. Because remember, you can take this money out for whatever you want to. That's why I like to use this for a lot of different strategies. We can use this for college planning. There's no different than you can use this on an adult for a child. So a way to build wealth through life insurance, lots of strategies where you can reduce your taxable income. Universal life is a little bit different than whole life. Same, once you get the insurance company or your insurance certificate, you get the cash value, and a portion of your premium goes towards the cost of protection. The major difference between whole life and universal life is that when you get a whole life policy, let's say that 100,000, that's all you can get. You cannot change your premium or your death benefit at any other date. So that 100,000, you can increase it if you wanted more life insurance with whole life, or decrease. With universal life, your premium is flexible, and so is the death benefit is adjustable. So let's just say again, going back to obligation, and when you get the insurance, you're getting a lot of insurance as you are younger. But let's say by the time you reach 60, you don't need that much insurance. And so you can request to lower that $100,000 death benefit down to $50,000 or $75,000, which in turn will change your premium. So two different concepts. Universal life has a flexible premium where you can increase it or decrease it, and an adjustable death benefit where you can increase the death benefit or decrease it. So, a couple of questions. Some people have asked me, well, if I want to increase my death benefit, let's say I get married and I need more insurance, do I need another policy? And with whole life, you would, but with universal life, no. Well, what will be my premium on the new portion of insurance? Let's say I want $200,000 now, or I want 150. Well, the additional 50 or 100,000 that you increase it to will be based off of your age and health condition at that time. In some policies, you can increase up to a certain amount with no additional underwriting. And so you really kind of want to look at what policies you have now. If you don't have whole life and you have universal life, you can definitely increase that death benefit. But what I am doing in the month of September is life insurance reviews. Because what I have found is a lot of people have old policies that they have gotten 10, 20, 30 years ago. And guess what? When you kind of set it, you forget it about life insurance because you say, I have it. And this is the slide that we're going to leave off today. So if you need a life insurance review, you can feel free to contact my office at 800-408-8850. Again, that number is 800-408-8850. You can also reach me. I'm going to stop sharing my screen right now. You can also reach me at Tiffany at impactfulsolutionsgroup.com. That's Tiffany at IMPACTFUL solutions with an S group.com. I'm also on Facebook at Impactful Wealth Solutions. You can definitely reach me on Facebook or Twitter at Miss MS Money Savvy, SAVVY. So that is our time for today on life insurance. I just wanted to do a good 30 minutes about the importance of life insurance, why you need it. I definitely hope my story has encouraged you to think about, you know what, I need to protect my family in the event if something happens. Guess what? You don't have to be in perfect health to get life insurance. There's all different types of policies, no matter what your health condition is, for you to get life insurance. So next week, I'm going to start with variable universal life and talk about the third option for life insurance. And variable universal life deals with life insurance that is tied to investments. With that particular policy, you have to have an investment license to sell it. So it's called a LIRP, Life Insurance Retirement Plan. And so it's a part of it's life insurance, another part of it is investment. But that is my time today, folks. It's 7:36. Just wanted to give you a quick introduction. Remember, you can reach me at 800-408-8850 or at impactfulsolutionsgroup.com or directly at Tiffany at impactfulsolutionsgroup.com. Thanks so much and have a wonderful Sunday.
Take me to the point where only love can be found. Take me to those places. Take me, take me. Ooh, waiting on the right guy. He says I'm precious, but I think he's lying, just to get my attention and make me fall, not to mention he got crazy intentions. I couldn't trust him, so I didn't want it. Surely I know exactly what I want. Surely I know exactly what I still. I haven't found what I've been looking for. Oh, I can't do this no more. I'm a jam. Just running high, so far away. True love, I'll never gonna pack my heart. I'm a jam. So I done it all before. Why did I even ignore? I played the role of a bad girl and snuck some boys out the back door, so somebody would love me. I got smart and started thinking I wasn't smiling or feeling free. Shorty, this ain't love, yo, and I ain't happy. Surely know exactly what I want. Surely I know exactly what I know. I haven't found what I've been looking for. Oh, I can't do this no more. I'm a jam, so far away. True love, I'll never gonna pack my heart. I'm a jam. That's what I get for being so big. So thought I found Mr. Right, but he tricked me. Smiled me, face somehow I felt hard. I'm hurt again and right back. It's lost now. Went a different place and lost a lot of time. I ran the wrong race and lost all my mind. But I gotta get back. I can't hide it. I gotta find it. I guess I gotta pay too much, get to it.